There are two ways to make money with investing. Either we simply just look at very long-term trends, we bet on adoption, we don't really care about what's going on this week or next week. Or we enter the player versus player game. We try to time the bottoms, we try to time the tops, we try to think ahead. Now it's hard to always estimate what the market will be thinking, on what kind of level will the market interact. Because there's the very obvious data, for example this here, Ethereum in US dollars, and many people might be looking at a chart like this. Many people might be drawing the exact same kind of lines, and then those lines might become a self-fulfilling prophecy. If Ethereum was to rally suddenly by 30%, maybe people that follow this chart tend to rather sell and not buy that much anymore. And if enough people think so, then Ethereum will go down. So that's the first level of looking at things. But of course there is all this correlation in crypto, right? When Bitcoin goes up, then Ethereum tends to go up as well, Solana as well, and vice versa. So there are general macro trends and they can override just US dollar charts like this. If Bitcoin was to suddenly hit $200,000, then Ethereum of course will not top out over here. It will just continue going with the general market. And so a slightly more advanced way to look at the situation is to look at Ethereum dominance. So this looks now at the importance of Ethereum within all of crypto. So we completely neglect whether or not crypto is expanding or contracting, if money is flowing into the space or out of the space. We're just looking at what's the best performer within the crypto space. This does make sense, right? Because we allocate capital towards crypto and we've got opportunity costs. Should we buy Bitcoin? Should we buy Ethereum? If we have some allocation to crypto anyways, this chart gives us the answer. So at the bottom, 7% of all of cryptocurrencies market cap was in Ethereum. At the top, it was at around 21%. And currently, we are a bit under 12%. And there seems to be a trading range here, right? Sometimes Ethereum is, comparatively speaking, within crypto very cheap, as it was at the middle of April of this year. And sometimes it's comparatively expensive, as it was for the most part of the years of 2021, 2022 and 2023. Now this is still painting the picture with a very broad brush, because again we are just looking at Ethereum relative to all of crypto, but is an investment in a small altcoin really comparable with Ethereum? Or shouldn't we rather compare the safer of the cryptocurrencies? If we already buy the large caps, right, the safest of the cryptocurrencies, maybe the relative performance of those to one another make more sense to look at. And so then we get to this chart, for example. This is Ethereum relative to Bitcoin. And again, we've got a trading range. And again, we've got more upside than potential downside. The downside is maybe 40%. That's our risk. And the potential upside is more than 200%. Historically, it took roughly 2 years to move from the bottom to the top. So this would mean an appreciation of those 200% in roughly the next 1.5 years. Now, just because those lines on those charts align to a degree, and just because in the past the price tended to move between those lines, doesn't mean that those lines have to be respected in the future, right? We could just break the support, we could just break the resistance. So really what matters is, how is the capital flowing? Who is buying, who's selling, and how is this likely going to continue going forward? Now the reason for the recent outperformance of Ethereum versus Bitcoin, but also versus the entire market, is the inflows via the Ethereum ETF. Wall Street has bought Ethereum massively in the last 4 weeks. There was pretty much not a single day where Wall Street did not buy Ethereum, where Wall Street was a net seller. Instead, there's hundreds of millions of dollars of purchases every single day through the ETFs. The purchases of Bitcoin have a similar magnitude. We do have some days where it goes negative, but again, it's in the hundreds of millions. The difference is that Ethereum's market cap is much smaller than Bitcoin's market cap. So the supply absorption is much higher. As a fraction of all of the supply that gets purchased, Ethereum sees much more upward pressure on the price compared to Bitcoin. That's again why Ethereum is outperforming BTC. So if Wall Street continues to buy at these massive rates, then this Ethereum to Bitcoin chart is likely going to see continued appreciation. This is actually what I personally expect. I do think that Ethereum will continue to do better than Bitcoin in the next months. I don't have a crystal ball either, right? But just looking at the data, just looking at how consistent the purchases are by Wall Street, it's simply just a conclusion that I draw from all of this. Now here's another useful chart. This is Ethereum relative to Solana, and Solana did outperform Ethereum for quite a bit, or Ethereum did worse than Solana during the Memecoin speculation phase, right? When Pump.fun was all the talk, when everybody was trading meme coins left and right. That's where Solana did very well, but now it's Wall Street that's dictating where things are going. And Wall Street can buy Ethereum, Wall Street cannot buy Solana, at least in the US. There's only an ETF in Canada. This might change though going forward, right? So once a Solana ETF gets approved, I do expect Wall Street to also buy SOL very quickly. And Solana's market cap is smaller than Ethereum's market cap even. So the upward SPY pressure might be even higher. Now, many people thought that the altcoins this month went up because there's now altcoin season, right? Across all sizes, we now see altcoins appreciating. But the reason for that is not that retail is suddenly coming back, that many people are currently buying the altcoins. The reason is the tight coupling with Ethereum. This here is the top trending tokens on the Ethereum chain, and they're all directly coupled in liquidity pools via wrapped Ethereum. So when Ethereum goes up by 10, 20, 30, 40, 50%, then automatically, without a single trade ever taking place, the altcoins appreciate to the same degree, because the ratio between the number of altcoins and the number of wrapped Ethereum is what determines the price. So we've got these liquidity pools on the Ethereum chain. We've also got them on all the layer 2s. This is the base chain. This here is the Arbitrum chain. And here we've got Optimism. So always most of those liquid altcoins are combined with wrapped Ethereum. They're coupled in liquidity pools. So that then begs a question, right? When the altcoins automatically appreciate to the same degree as Ethereum, when Ethereum is going up, then how is the capital actually flowing between Ethereum and the altcoins? When the altcoins didn't go up because retail demanded them, but because Ethereum got bought by Wall Street, what's actually happening with the alts? The answer is over here. This is Ethereum relative to the others market cap. So the market cap of the altcoins that are not in the top 10. And we can clearly see capital rotation happening every now and then, right? Sometimes Ethereum is outperforming, sometimes the altcoins are outperforming. And since the middle of April of this year, Ethereum is outperforming. And again, this is not just random fluctuation this time. I believe that's all Wall Street demand. So the altcoins might continue to do well because Ethereum gets bought, but the altcoins might not do better than Ethereum itself. The altcoins did do much worse than Ethereum. Ethereum outperformed the alts in the last 4 months. And again, I expect this trend to not turn around. There's no reason to assume why this should suddenly turn around. Why is Bitcoin so close to its all-time high? It's because of the demand through the ETF and through the Bitcoin treasury companies, right? Like Michael Saylor's MicroStrategy. In the last 1.5 years, they did nothing but put upwards pressure on the Bitcoin price. And now this is also moving to Ethereum. The number of search queries for Bitcoin and Ethereum tends to be rather low. So really, it's the heavyweights, it's the whales that are buying in. It's not your average Joe that's putting $5,000 in Bitcoin or Ethereum. It's the big guys. The search interest for Bitcoin here in red is pretty low. The search interest for Ethereum is also not that high. But have a look at the number of ETH that's held through the ETFs by Wall Street. This is exploding. Ethereum is getting bought left and right. And the Bitcoin situation isn't much different. It's not accelerating as quickly as for Ethereum, but still the constant buy pressure from Wall Street is now dictating everything. And Wall Street is not going to buy Dogecoin or Bonk or Shiba Inu anytime soon, right? They're going to buy the market leaders. The market leaders, of course, being Bitcoin, Ethereum, and Solana. I don't think that we're going to see purchases in the smaller altcoins anytime soon through the ETFs, at least in any meaningful way, at least in any meaningful scales. Not in the hundreds of millions of dollars every single day that we see with Ethereum and with Bitcoin. Now, I do have an announcement to make. I always talk about how to bet on relative valuations, right? How some altcoins might outperform or underperform Bitcoin and Ethereum, and how those relative valuations aren't that volatile, right? We tend to see relatively clear trends, and how there's quite a bit of alpha to be made with this, right? We can outperform using those clear trends. The only issue is that for most people, this is a bit too complicated, right? You have to learn the platform, you have to learn risk management, how to adjust stop losses, etc. And so here's now the big announcement. I have launched for a small number of people to just deposit capital into a capital pool and then automatically copy trade whatever I do. The launch happened 24 hours ago for the annual subscribers of premium of this channel. And it's already going well. Of course, there might be some volatility to the downside, but currently we are 1.7% already in profit. Before that launch, I tried this out myself on a personal account. So I started with 40K, moved this to 60K within 2.5 months. And while I don't expect to get the same kinds of returns when moving more capital and when maybe luck isn't that much on our side, I still believe that the strategies we are using will yield long-term risk-adjusted positive returns. So in the early days, I did this all with borrowing and lending platforms with DeFi. Now I moved to perpetual futures, right? Bets on the price. But this relative valuation bet approach, I already do this for almost 4 years. So that's what this chart is showing, right? If I just dollar cost averaged into Bitcoin, I would have gotten this light gray line as return. But instead, I got the black line in return. And here's how I do this. I check for altcoins that have a quickly rising supply, while the demand doesn't grow at the same rate. So this is the example of Balancer. I show this very often here publicly on this channel as well. Of course, there are way more examples that I share in the closed community. But because of that token inflation, relative valuations tend to go up very, very steeply. So this is now Ethereum relative to Balancer. So we go short Balancer, or we borrow the Balancer token, right? We profit when Balancer goes down, and we go long the thing that we believe will outperform. And then we get a chart like this. It's a strategy that works for many altcoins. Just have a look at the overall altcoin unlocks over time. So how much new supply hits the market and how much capital needs to flow into the market just to keep prices stable. This here is weekly unlocks, and it tends to be in the hundreds of millions of dollars every week. Especially this week is extremely aggressive with unlocks. And so this is the return we get, but that happens because this is the actual performance of the altcoin. And this is a chart we see very, very often. Just have a look at your favorite altcoin with high unlocks relative to Bitcoin, relative to Ethereum, and you're likely going to see a chart that goes down quite consistently. Who's getting all the tokens? Who's benefiting from this? It's the founders, it's the contributors, it's the early investors. They are all dumping on retail. So when you're wondering why your altcoin portfolio tends to underperform Bitcoin all the time, it's because of that, right? It's because all those people dump on you regularly. And so that's how we make money as well. We make money when the insiders dump on retail, and most retail investors don't know how to play the game. I made a lot of tutorial videos on the topic, how to bet on relative valuations with perpetual futures, how to do proper risk management with those bets. And then also, and this is the big thing, right? How to provide capital to a capital pool so that every trade that I make automatically gets copied with your funds as well. So that something like this isn't theory, but actually becomes practice for yourself as well. You don't have to necessarily go through all of those tutorial videos and have to do active trading all the time if you don't have the time. If you do want to trade yourself, there is obviously the offer, because I do share my trades in real time as well, right? For example, here, this is the Balancer short that I announced on the 19th of July of last year. So that was over here. Since then, Balancer outperformed Ethereum by more than 116%. And so if you've got some capital, but also some time, then there's the monthly membership, right? You just sign up, you watch a few tutorial videos, and then you can copy trade whatever I do. And of course, also do additional trades besides that. If you don't have much time though, if you cannot do the active trading yourself and you're busy with maybe managing a business or a very busy job, you've got the capital, you don't have the time, then you can also automatically copy trade me. The automatic copy trading feature is available for the annual subscribers. So if you sign up for the annual premium membership, you get a bit of savings as well, but you also get access to the automatic copy trading, which again, I've just recently started. We don't know yet how this will perform, but in the last 2.5 months on my private account, it did pretty well. And very long term with borrowing and lending platforms, it also did pretty well. I can't guarantee that it will continue to work in the future, right? Prior returns are no indication of future returns, as people say. But in general, I try to get the odds in our favor, right? When everybody dumps on retail, we can still profit from that if we set ourselves up accordingly. A link to Premium should pop up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.